Hello, good evening, traders. Today is Sunday's class. We have our special guest, Josh. Stocks with Josh should be here, but we'll go ahead and shoot him a text and say, hey, you're running late. But let me go ahead and share my screen. We are live via Zoom. So let me share my screen. Okay. All right. So first of all, before we say anything, Josh is gonna be here. Hopefully he'll make it. I know he's a busy man, but Tom has a special surprise for everybody. I said I was gonna tell it to people later, but but let's go ahead and start it since Josh is not here yet. Go ahead, Tom. The platform is yours.
Oh, well, I decided to kind of market my Turtle Trader stuff. So I created a hat with a logo yesterday. Oh, can you guys see it?
Yes.
They're not, I haven't got a store yet set up, but I'm gonna set up a store where if you guys ever wanna, if you believe in the Turtle Trader method, right? Slow and steady, minimize your losses, right? Stay with the Turtle Trader philosophy. If you've ever looked at it, I find it works really well. I'm going to be selling some merch on that store when I get it set up. So if you guys are interested, I'll put the link on Discord when it's available.
Thank you, Tom. So Tom is our junior moderator in the Discord. Give me 1 second. Something is. Give me one.
Thank you, girl.
I'm having technical difficulties. Give me 1 second. What is going on? Give me 1 second, guys, okay? It's just too many screens and I have to synchronize this first on the Zoom. Okay, I think that's better. All right. Sorry about that. So while we're waiting for Josh, let's go ahead and answer those questions first. Number one, we'll do a technical analysis later after the class. We will go over trend versus range, identifying or the difference between trend and range. And then we'll go over if Josh ever make it today, he'll give us some wisdom, nugget of wisdom. And to Java asking how to trade Josh in the live trading, how to do it. Dude, you
Hmm.
gotta have to join his live trading for you to join him. If you are a beginners for options or trading, if this is just a new journey for you, this is pretty new for you, I highly suggest you start with Michael. And I also do live trading for options. I do shares and options actually with Tom and with Airtwan every Tuesdays in the morning, Thursdays in the morning from 9 till 10:30. And then I also have a power hour. I do options and shares as well there. So if you want to join us. But if you're going to do with Josh, you better make sure you are ready to pull that trigger because he will tell you to buy and he will tell you to sell. So if you're pretty slow on that one, you may need to do some coaching or at least learn a little bit more. Josh is finishing up over
Yeah,
with
but
Kingdom
and you
class.
got that, and he's YouTube, so it's a 5 6 second delay too. So you got to be real on the ball.
Yeah, yeah. Oh, that's right. Because and also Java, if you want, there is a beginner's class, a beginner's beginner, Kingdom's Capital. He does a Sunday class as well at 6 o'clock p.m. where he teach you terminologies. He teach you support and resistance, the use of EMAs, the use of MACD and all that RSIs. We do it here too, but what's his name? Capital Kingdom, right? Or Kingdom Capital.
Capital, I think. Yeah, Kingdom Capital.
Kingdom
Yeah.
Capital. Yeah. He's teaching there too for beginners. So you guys are more than welcome to join him every Sunday. Give me one.
You know what? Josh was joining him tonight too. Maybe he's still on that one.
Yeah, I'm not sure if he's joining him, but he did not tell me. But we'll wait for him for a little while. Oh, okay. In regards to Parker, I don't communicate with the other crown traders except for Michael and Ertuan. Ertuan is my partner, and then Thomas here. I from my understanding, he is opening his own thing. I'm not sure, so I may be the wrong person to talk about it. And I just looked at Okay. All right. So let's not talk about him. Let's just move forward. We are Josh Discord. I believe that if you're part of the Josh Disc community, I think we should just advertise on Josh. Sean, can you please mute yourself? So, once again, no worries. I text him. I told him you're late for 1 minute, so we'll be live in 30 minutes, 30 seconds. Yeah, he better not, right? At the end of the day, this is his community, right? We're just here to support him. So I know he's a busy man. And as you can see, the Discord has a channel now for all the calendars. It's still incomplete because I do live trading pre-morning huddle every Tuesdays and Thursdays with Tom and Airtwan. We do options and shares in there. And then we also have a power hour every Tuesdays. I believe I'm opening it that Wednesdays at 3 to 4 p.m. So we have 4 trading days for me. And then you have Michael on Monday, Tuesdays, and Thursdays. And that is strictly options. Then we have Josh, to those people who also are VIP. Actually, all Crown Traders Live will be now available to the VIPs only. But originally, Josh has his live trading every Wednesdays and Fridays. So, from my understanding, if you guys are jumping right away to Josh, I highly suggest you start first with Michael or me to do your live trading, and then you could go to Josh because Josh is more advanced traders and it's quick. You have to make sure you quick with Josh. Us, me, and Michael would just chill, wait, confirmation. And when it comes to differences on percentage profit, right? Somebody is asking me, Mary, how come Josh has 20-30% while I'm only have like 2 to 3%? Those depends on your position size. Okay, how much position size or how many contracts did you buy? If you only buy one or two or three, and then Josh buying 20, 30, 40, obviously her profit percentage will be higher compared to yours. He's much of a risk taker and you're more a little bit conservative in a way, right? And besides, you cannot compare a deep pockets to our smaller pocket in a way. So okay, so those are the valid questions that people are asking. And what else? And there's going to be changes on the live trading. Currently, right now, all Crown Traders live trading is available, open pretty much to everybody. But once the changes take place, it's going to be only for exclusively for the VIP members. Okay, I'll give like 2 more minutes and then we'll go over trend versus range. Somebody also asked, Ms. Mary, is your class for beginners? Yes, this class is beginners, this class for intermediate. If you're an expert and if you have a better understanding on the technicals, then I believe you could just come here and practice perhaps with us or give us more feedback and help us, right? So, but yes, this is available for everybody and this is good for everyone, especially to those people who are beginners or intermediate. I also offer a coaching one-on-one if you guys would like to, move forward or refine your skills on trading. So I do offer that. So we're not gonna wait for Josh. Yes, yes, correct. When I do live trading, I actually do it via Zoom. So instead of publishing or streaming this via YouTube, which is lagging, I do it via Zoom. So you get the actual time between my trading or my go signal compared to waiting on the YouTube. There's lagging on YouTube about 2 to 5 seconds if I'm not mistaken. So it's good to be on the Zoom. You could interact with me, you could ask me questions, but I always please suggest to mute yourself when you enter my class. All right, I guess let's see. Let me go text. Go ahead. What do you mean, coaching the class? Are you talking about the live trading? The coaching class is a premium. There is a premium for that. You have to pay for coaching class. You have to sign up. Sure. You have to sign up via WAP.com. Cleansey, one of the admin, will put a link where you could do a group session if you want a group sessions or a one-to-one session. So there is a difference between one-to-one and a group session. So I have a group sessions between 3 to 5 people, and then I have a coaching one-on-one, and I also have Tamir, and I'm also going to open some of the coaching with Tom. And of course, Ertuan is always with me. You guys are more than welcome to ask about Ertuan. Ertuan is my partner here. But if you do more, each one is more discipline, strategy, management, fundamentals. And if you do want to move forward with your options, I do basic options. Tom also does coaching with me under my umbrella. So he does coaching with me. He's more complex options trader. Correct, Tom? Yes. Yes. It's supposed to be on in WAP.com. So I'll go ahead and verify first to Clancy because he's the one who's handling all that link. I do have a small group coming next week, and I also have a group sessions, the one that Tamir is advertising. That's about 3 hours, 2.5 hours class session with Tamir on December, I think November 30th. So I'll give you guys a calendar when to sign up when I receive that link to Clancy. Abs Absolutely. Let me go ahead and text Josh. Otherwise, we'll go ahead and start the class. Josh, you are welcome. Josh is supposed to be our guest today, but I think he's still running a little bit late because he's with Kingdom Capital. Are you coming? Otherwise, I will start teaching. Okay, so let's go ahead and start. Give me 1 second. Let me share my screen. Can you guys see my screen?
Yes. Yes, you're up.
All right, let's go ahead and do that. But I did a short, hold on. Give me 1 second, guys. Okay, I have so many screens, but I would like to share you guys a video first. Okay, I'm assuming you guys could be able to see this, right? Hold on. I think I am not sharing that screen. Can you guys see this, what I'm moving?
Yep.
Yeah.
Okay, so let's talk about trend versus range. Anybody can give me an idea what is a trend? I know I'm giving you guys in the spots. Anybody? Tom, what is a trend? What do you see when you see a trend? Let's say you
When
see
you
an
see,
uptrend.
Direction.
yeah, you see a number of candles moving in a direction in one direction.
Okay, that's right. We do see a directions. What is the
Yep.
most important thing when you see a trend? Let's pretend that we are going high. What
We
do
see
we
higher
see?
highs and lower highs.
Higher highs,
Very
higher
good,
lows.
very good.
Yep.
So your typical trend when it's going up is we create a higher highs, higher low, higher highs, higher low. And in the downtrend, just like this one, right? We see lower low, lower high, lower low, lower high, right? So this is a trend. So you see a directions where the candles are going, which is perfect because we would like to trade on a trend because trend is your friend, right? So that is a trend. So if you are going higher high, higher low, higher high, what is the normal or typical number of rally before it actually start reversing or perhaps start trading or consolidating or being in the range? What is the normal rally or run before it actually starts showing weakness on the trend? Do you guys know?
2 touches at least.
Break down from a support or something.
When we see a rally, a
Four.
normally we see a rally, one run, pull back, run, pull back. Do you guys see that? Is that a trend? Is that a
Yeah.
trend? Run, pull back. Is that a trend? This is a perfect uptrend, right? On the perfect market, or at least this trend will get exhausted, right? We normally see at least typical 3 rally. Same thing with the downtrend. We have lower low, lower high, lower low, lower high, lower low, lower high. And then you know what happens after the third rally? Normally it start giving us a higher low and then either consolidate.
Yeah.
Same thing here. Consolidate. So if you start looking at the trend, most of the time we see a rally of 3 times and then we start seeing a higher low on the uptrend and we start seeing a higher low, no, sorry, lower high on the uptrend and higher low on the downtrend. And then we start seeing consolidations or in range. So now we are in range. So after the 3 rally, we start having consolidations or we pause because range is what? Hold on, somebody wants to record this class. This is being recorded via YouTube. So when we start losing momentum of this trend, we ended up having consolidations or in range. So we have a range because why do we start having range or consolidate? Why?
On decisions.
Yeah, it's become indecisions. Normally, we're waiting for, there's a lot of reasons, right? And the buyers and the sellers are just in the middle. They're just stuck in there waiting if they're going to buy more or they will have to distribute their stocks. Are they going to sell? So it's a pause on the market waiting for catalysts, either positive or negative, right? So learning to identify the trend and the range would at least help you prepare when to buy or sell or be ready when the institution start buying or when the institution start selling. So those two things are very important on the trading. So now let's take a look at this example. After a trend, is this a trend? Is this a trend?
Yes.
Very good. What is this?
Consolidation.
Consolidations or a range?
Bull flag. I mean bear flag.
Yes. It's we're actually talking about trend versus range. Those are patterns, okay? So range is more of a pause on the market saying, hey, let me go ahead and do a range because we're waiting for what? Feds speaking, catalyst, what else? Earnings report. Those things affects the market. So the buyers and sellers are just stagnant. They're just going up, staying in the support, respecting the resistance, going back to the support, respecting the resistance, going back. So we're just waiting, and this range or what? Is it a neutral, bullish, bearish? Is it what kind of signal is this? Is this bullish, bearish, or what?
That's a
Neutral.
neutral, and it's a
Very
channel.
good.
Is
Very
that
good.
correct?
This is a neutral. When there's a range, the market is pausing and we are in the neutral territory. There's no buyers or sellers at the same time. There's none. We're just waiting. It's a pause. It's saying, hey, the downtrend in this particular example, this downtrend is a pause. Like, we're gonna see, are we going to continue to go down, or we are ready to continue to go higher and create that higher high? And if we start seeing candles breaking out of that range, that is saying like, hey, we might do a reversal, right? Maybe this is an earnings, and then like Nvidia, right? Earnings beat, catalyst, forward guidance is amazing, exceeded expectations, and then we have a valid volume. And what justifies that range or horizontal channel? When there's a breakout, we are waiting for what? For confirmation to go
Confirmation.
upside.
I always have this problem with confirmation. Mary, can you explain that how someone can confirm that this is a valid move? What is confirmation?
So what is the confirmation when there is a candles that break out of that range? What is one of the
Yeah,
best way
volume,
to identify? Very
like a
good,
volume
Maxine.
spike.
Volume spike. If there's an increasing in volume, there is a possible reversal to the upside. It means it's justifying that move to the upside. Because what? Volume is like what? It's like participants, right? The more people it comes, the faster it goes. So if there's no volume, this thing is not going to go higher. Yes, we could see a candle here, but if the volume is stagnant or just below normal, then what is it doing? It's just basically moving without volume. So it could
Yeah.
lead to what? A fake out.
Pick out.
Yeah, a fake out. So volume, using also volume, incorporate it on your trading journey will definitely help you with the confirmation, right? And
So,
there's also a lot of ways for confirmation. Number one is your volume. Absolutely. Because this candles is not going to move without volume, right? It's like putting gas in your car. If you have no gas, your car is not going to move, right? So what are you going to do? If you have no gas in the car, you think that car is going to move? No, absolutely not. Same thing with candles. This thing could be moving upward without volume. We've seen it. We've seen it, right? We could see candles move up without volume. And guess what's going to happen? It goes back up
Go back.
because there's no volume. There's no acceleration in there. You're just stuck in there. We're moving, but hey, your Tesla needs to be charged. And it's not going anywhere. It's just moving, waiting for it to die, right? So same thing with that. And another confirmation for a breakout is what? There's a lot of, excuse me, there's a lot of ways to confirm a trend if there's a breakout. What are those? Give me examples. Tom, you're good at trading. You have technical skills. I'm sorry, I'm not trying to put you on
Hey,
spot.
Mary, I just wanted to make sure that you knew I was here.
Hello, hello. Josh is in the house. Let's go ahead and
Hey.
stop sharing my screen. Let's
I wanted to give my answer and impress him. Now you cut me off.
No, I'll listen. I want to hear it.
Okay, no, go ahead. Go ahead. So let's go ahead. The goat is here. But let's go ahead and go ahead, Tom. So what are the other things that confirms the trend is breaking out? Let's say we are in range. So Tom, explain it to me. We said volume. Okay, what else?
I like to look for the MACD and RSI to be crossing over, right? Especially into bull territory.
Okay, very good. That's one of the things that we could use too, RSI and MACD. I'm sorry, this is recorded, Josh, so I cannot be able to see my RSI and MACD. But yes, RSI and MACD, what else?
EMA crossing.
Very good, very good. If the candles break out of that EMA, for example, what are the one thing that remains bullish if we are above what? If this is 50 and let's say this is 200, which one do you prefer to be above?
50 about 200.
Absolutely. Absolutely.
Yeah.
Right? So we would like to see, I'm struggling here. I think my pencil is nervous because Josh is here.
Right.
So we would like to be above EMAs, right? To confirm that there is a breakout. Also, we would like to see candles above the trend line and above your EMAs. Those are extra confirmation. right? Volume, EMAs, Tom said about RSI and MACD, those are good ways to identify confirmation. So it kind of confluence like, hey, that justified the breakout. There is a candle that break above the resistance. There is a candle and there's a volume, which is volume is the number one indication of a confirmation. So let me go ahead and pause that here and let's go ahead and give the platform to Josh. Josh, thank you for being here. It's always such an honor when you are part of our Sunday class because at the end of the day, this is your family. This is your community, Josh. So this is Stocks with Josh Discord, and we welcome each and every one of you. To those who are in YouTube, please join Stocks with Josh Discord. We are a big, happy family in his Discord. So go ahead, Josh.
Well, first of all, I'm thrilled to be here. And give me, if you don't mind, Miss Mary. So what was the core teaching today?
We're learning about trend versus range. So identifying between the trend, which is the highest high, higher low, lower low, lower high, and then the range. So we do need to have, normally after a trend, what happens? We either consolidate, the market take a rest, we breathe, and we see range, right? And then we wait for catalyst. Perhaps there's earnings, there's news that things between the buyers and the buyers and the sellers are just waiting. Either they're going to buy or they're going to sell. So that's what we're talking about today, Josh.
Yeah. So I don't know if anyone had a chance to watch my fib video yesterday about the fib levels on the SPY, and I showed the high time frame of the monthly chart, and I showed that every time we've had a pullback, it's come exactly to the 0.5, the 50 fib level, and we've bounced. And I love that because it's so consistent. And you know that if the next time we come down to the fib level off of the swing low, swing high, and we get to that 50, everybody, this is the reason why certain prices or levels get respected, is because there's 100 million charters out there like all of us in this group tonight, and they've identified that. They've identified that the SPY bounces at the 50 twice in the last 4 years. And so you got to know that that's the type of thing we look for, so that if we got down to that level anytime here in the next year, we know that's a great place to put risk. And so I think that I made this point in Charles' show. I just came off of his show this evening. And, even though we are no longer on offense in this market from a very big time frame, the market is still very, very strong. And, it's very easy when things are not steadily climbing. We enjoyed these stacked green candle months, one after the other. It's very easy when you get your first red candle to panic. And I like to relate it to day trading. So when you first start trading, it's wonderful. Like this last Wednesday, we got into a Google trade, and it was easy because the minute we got in, it was pumping. We got in and we saw no red candle. The 5-minute candle closed green. The next 5-minute candle closed green. The next 5-minute candle closed green. And we didn't have to see red. And so it was a beautiful run up. I think I made 40% and got out. But in the case of Wall Street, all that we've seen in the last month here, and we're not even through the month, so we're almost through the month, but all we've seen is our first red candle of the month. And so I think that it's great conversation, Miss Mary, about talking about the range and the trend. And if we understand charts, and that's what we're here to learn, the trend is still up and still strong. And all we've had is one red candle so far on a higher time frame. And so, if you go back and you look, can they see my chart, Mary?
Would you like to share his chart? Go ahead and share, Josh.
Yeah, you're on, Josh.
Yeah, we can see it.
Yeah.
Okay. I mean, so here we are. We've got this red candle.
I can't
Now,
see it. I'm so sorry, Josh. I cannot see. You guys could see it? Okay, I'm sorry. I got it.
No problem. Thank you for being careful. So I made this comment in my Welcome to the Weekend video that if this candle closes red, bearish, engulfing to the previous monthly candle of October, this would indicate that we will have another bad month. Okay, it'll indicate that December will be a down month. We only have a week left here before this candle closes. So I'm guessing, and this will be, I guess, helpful to everybody going into this next week. we're going to come down. And this is so important what I'm about to share with you guys. We can all make money on what I'm about to share with you. Okay. It's all going to come down to this level right here getting tested this week to determine I'm going to put it this way, but only because we're a small little knit community tonight. I'm going to say something that I couldn't say on YouTube. The likelihood that we're going to come back and test 662 on the SPY is huge. Okay. So I would tell you guys, there's probably 100% likelihood that we're going to test this 662 on the SPY. Now, that's not financial advice. Don't jump on my bullishness and go out and load up based on that. But I'm just letting you know that this is, trust me, anybody who charts like me understands that tells the market exactly what's going to happen in the month of December. So if we come up to 660, I'll get you the exact number. It's the exact close of this candle, or this exact open, 663.17. So let me put that up. 663.17. Wait, 663.17. All right, 663.17. Give me a second. So that's the level that if we close this candle, it means the month of December is going to, if you go back in the history, you're not going to find any scenario where we got an engulfing monthly candle that it didn't go more down the next month. Matter of fact, here's a great example. Okay. Here's an engulfing candle to this candle. What do we do the following month? We went down much more.
Yeah.
Let's go back. We'll play the game. Engulfing candles. Okay. This is not an engulfing candle because it didn't rise above that particular month. This one was an engulfing candle. And what did it do the next month? It went down more. Let's see here. This one is an engulfing candle, and it actually had a doji the following month, right? Failing to recover above 50% of the candle, which is something I would teach if we were talking about this at this time. I would say we have to watch and see if we get a greater than 50% recovery of this candle. We didn't. What happened? It went down. So that engulfing, even though it didn't play out the following month, the little move that it had was just a minor relief rally, and the following month it went lower. So if we go back in time, you're going to find that when we get an engulfing candle, it means the market's going down. So if we take our current position, this candle, the bulls are going to try to push this price above 663 to maintain the rally. Or another way of putting it is, if the bulls get the price back above 663.17, then the rally is maintained. And we have literally, I don't know how many days are left in the month, but next week, the Thanksgiving, the market will be closed. Friday, the market will be open from till 12 noon Eastern time. So we have a short market, and the market between now and the start of the next month has to recover above 663.17. Watch that with me, guys, on Friday's trading, by 12 a.m. Eastern time. And if we're above 663.17, it means that the bullishness of this move is actually 100% intact. Does that make sense?
Yeah, absolutely. And we got 4 more days to finish that candle, Josh.
Exactly. So 4 days to get above 6. And so here, let me talk about it from a different perspective. Monday morning, a bet on the SPY through the week going higher would make some sense, because in my mind, I don't think the market will go down for another month unless it tests this 663.17. So again, I think that the market makers are going to tell us a lot by Friday. We'll know if December is going to be rotten if this engulfs. We'll know that. So it doesn't mean that we'll go straight down. It just means that most everything we're looking at, we could expect a lower price if we do not get above 663.17. And I went through that with you guys so you can understand how important it is to just take a step back and understand the trend. This trend is bullish. The last 4 weeks, the last 3 weeks, that bullishness has been tested, but not very much. So it's the first red candle.
Yep.
And you go back in time, and if you sold on the first red candle here, it'd be a mistake.
Yep.
If you sold on the first red candle here, it'd be a mistake. To be honest with you, if you sold right here, you would have been selling early because it still went higher. So we don't even have 2 red candles. And the first signal that we're going to get 2 red candles is failing to get above 663.17. So that's what this is about, man. We're looking at the patterns. We're looking at the history. You can't make, I made this point heavily in my session with Charles here just a moment ago. You don't try to make an indicator fit price. You try to see if price respects an indicator. And for as long as you try to fit a concept of moving averages or RSI, and you try to make decisions because you saw it work successfully one place, you've got to see by looking at the price on the chart you're looking at, in this instance, it's the SPY, and you've got to find out what does it respect. And that's, you don't fit indicators to stocks. You don't fit stocks to indicators. You fit the indicator to the price. And I want to make one more point. I covered this. I don't know. Again, let me know if you guys watched that Fib class, but I'm going to show you guys what I showed in that class. So we have here from this low, pivot low, to that pivot high, you can see that the price jumped right on this 0.50 fib level, which is the beginning between 0.5 and 0.68 is called the golden zone. Okay. And then we go back here.
50% again.
Exactly. So let's turn off this one. And amazingly, right here, where did it bounce again? Exactly on the 0.5. And so instead of trying, now most people look at the 0.618 as a reversal, but the SPY on the monthly chart doesn't respect that. That's like the #1 golden pocket zone. So if you're sitting here trying to get price to respect your theory on the fib without using the fib to find out how price relates to that indicator, you're trying to fit, I don't know, the glove on the wrong hand, or on the wrong foot, or put the shoe on the wrong foot. In this case, if you start going back through the history, you find that the SPY is stronger consistently than Tesla, as an example, and it reverses on the 0.5. Bam, reverses. Same thing we had here. Let me turn this back on. It reversed on the 0.5. So the trend is very strong. And it's in the future, if we run a fib here, okay, interestingly, if the market were to fall apart right now and it were to run the course of the previous 2 pullbacks, which I don't foresee, and that's another thing, we're jumping around a little bit tonight, but how many people would be buying at 587?
Me? Yeah. Absolutely.
Me, for sure.
Yep.
But I don't expect it now, because I don't think this is a full move yet.
Yep.
But the next fib level to test whether a trend is healthy is going to be, let me turn that on here. It's going to be the 0.382. Okay. I've got that turned off because I had the indicator drawn to only focus on the golden pocket, so I could teach that for people, but let's just mark it with red. So now we've got the 0.382, and you'll find that Meta, I charted Meta with this the other day, and Meta consistently respected the 0.382. And that's because it was in a very healthy trend. Now, the 0.382 aligns perfectly with the SPY's previous resistance. Okay. So you can see that this, if in worst case scenario, this could come back to 610. And that's if it had a catalyst. I personally don't see the catalyst in the market. We've got good earnings. NVIDIA, king of the AI rally, just reported, shock and awe earnings. And so I don't even expect a pullback to 611. But if we got another bad month, let's say this confirmed and it didn't close above 663, and we then decided, okay, the likelihood is we got another month down and we had a pretty strong sell-off going, where are we going to look to for a potential bounce? Well, we're going to look to this 0.382. That's the first place where we're going to be looking for a bounce. So I wanted you guys to see that so that you could understand that this is an extremely healthy market. We've got our first red candle. It has not even closed engulfing yet. It's got 4 more days to test that. If it gets above 663, then we have nothing. The next month could be a fully green month. This would have just been like right here. It just would have been one red month in a series of green months. So that's why I always say that we have to follow the charts and not try to get ahead of them. We will know so much by this Friday. We will know so much by the market.
Yeah, agree. So that 3.8.38 is actually a short pullback for a strong rally. So that's why Meta, right, Josh, is just
Yes, that's considered a shallow pullback
Yep.
on a healthy trend.
That's right.
And but what's funny is that we could, if we got to 611, a lot of retail would be losing their mind, right? But if you are someone that invests and follows the charts long term, you should understand that 0.382 would, by the standards of Wall Street, be considered a shallow pullback. I mean, think about it. Look how big this
Yep.
move is.
Mm-hmm.
And if we've gone up here since 2022's lows from 359, we've been just going straight up here. We had one test there, sure, but then we continued the up move. If we had the next 2 or 3 months and bounced off 382, that's an extremely healthy up move. But I hate to tell you this because I've been doing this for a couple decades. A ton of retail would walk away if it had 3 months in a row that were red. They'd be like, "Oh, I can't do this. I'm done." Yet this is a I don't want to be overly bullish or overly this is, I call it an ATM because it's not easy, but you can figure this out. And pullbacks are money making opportunities.
And that's when I teach the community to Josh. I told him, I tell everybody, especially when I'm trading with them with the 5 minute, 15 minutes. If you see a one red candle, don't be afraid. Don't be checking out that exiting your position. Not unless that's your cue to get out, that's fine. But that's continued. That's a strong momentum to the upside. You just need a slow, at least what do you call that? A breather. I'm like, oh, let me go ahead and rest before I take another rally, right? So I always tell them, just please don't exit out, or if that's your cue, go ahead and exit. But one red, even two red candles are just always just a pullback, short pullback.
Yeah, we had some conversation that I enjoyed going over the 9 and 20, but I'll take questions, whatever you guys want me to cover.
Let me go ahead and give question to them. They were talking about the Fib class. The Fib class is available in the Discord. Josh had it, I think,
it's
on the
available
Saturday
to
class.
everybody. I teach every Saturday in the Welcome to the Discord videos, and I sometimes cover basics, but majority of the time it's teaching. I taught on the Fib just yesterday, and it was a great class. It was in my opinion, if you're in this Discord, you shouldn't miss those sessions.
That's what they're asking. They're asking about why the market go up when overpriced.
Why does the market go up when it's overpriced?
Yeah, that's what he said.
I actually addressed that in my in my session half an hour ago. If you guys get a chance and watch Kingdom Capital tonight, I did a good 10-minute rant on that, but I'll give you the answer. First of all, everybody should understand that it does not matter who's in White House, who's in the White House, does not matter whether it's Republican or Democrat. Every president that I've seen, I'm a financial guy, and none of them, doesn't matter whether they're, what party they claim to be aligned with. They all are like spending your money like drunk sailors. Okay. They're printing and spending, and they all have a different bill. So if it's the Democrats, they'll title their bill one way. If it's a Republican, they'll title their bill another. They always give these beautiful bills like Build Back Better or Big Beautiful Bill or COVID Relief Bill, or, they've always got something. But the problem with this, guys, is where do they get that money? A lot of you think, not a lot of you, there's people out there that think that money came through taxes. It didn't. They just created it out of thin air. And when they create money out of thin air, if you and I have a dollar and they print up 2 more dollars, our dollars are worth less because they made more dollars. You guys can understand the basics of that. So when the United States government is printing and printing $1 trillion a year, 1 trillion a year. They're coming up with new money and then pushing it into the economy to stimulate growth. That allows easy access for big corporations to billions of dollars. And that money ultimately trickles into the economy. It trickles into growth. In the case of Apple, a lot of you guys may never have heard that Apple, the reason why Apple stock has been trending with Chinese stocks, I don't know if you guys have noticed that, but Apple goes up when Baba goes up. Apple goes up when different Baidu goes up, because they've dropped $1 trillion into China. And so pretty much the United people are treating it like a Chinese stock. So if we have good Chinese relations, Apple's going up because they pretty much put all their eggs in one basket. And so the reason why stocks will continue to climb, and I mentioned the Apple thing because we're printing money here. It's going into American corporations. In many cases, it's going into other parts of the world, and it's just causing these companies to be more valuable, and they can't be measured against the metrics against previous generations' metrics. This will eventually be a problem, and you're going to see that the government will eventually have to deal with its debt issue, and it will become a debt crisis. But for the time being, as long as they keep printing the way that they are, American stocks should continue to rise exponentially. And so you can't sit there and use a decade's measuring reference to where these should be priced, because they're not in the same global economic environment.
Thank you, Josh. And one more questions. I know you're busy. All right, guys, that is more subjective questions. How many contracts you should trade if you have a small account?
I love that question. I'm not gonna answer it directly and say 3, or anything like that. I'm just gonna tell you that, again, in my welcome to the Discord sessions, which I hope you guys can meet, even if you're OG, show up there and watch, because I really dive in this question quite a bit. You need a trade plan, and you need to determine if you're going to trade. Okay, trading and investing are 2 different things. Okay, if you're going to trade, you need a trade plan, and you're going to need to know something about the technicals, and which is, I know you guys are trying to learn here with Miss Mary this evening. So you need a strategy. Okay, let's just say that you only traded the cross of the 8 over the 20. That's it. That's your entire trade plan. Every time if the overall market is trending, okay, then you're going to take the 8 over the 20. And you would want to do some things like make sure that on the SPY, we were above the 200-day moving average, and even above the 50-day moving average. And the 8 above the 20 would be a fairly decent trade plan, if you guys can follow me. And if you're going to do that every day, you've got to decide, I'm going to risk the same amount of money every day. Okay. And I'm simply going to follow my trade plan, which is to take risk when the 8 crosses above the 20. And I'm going to go long, and I'm going to hold it until the 8 and the 20 begin. As long as those lines are diverging, I'm going to hold. And as soon as they begin to converge, I'm going to sell. And I'm going to do that every day. And I'm going to put at risk $1,000. Okay. So that enables me to buy 5 options. The key thing about a trade plan is that you don't change it based on how you feel the following day. Okay. You don't sit there and go, well, you know what? I didn't do too good yesterday, so today I'm only going to buy 1 contract. If your trade plan is something that you're going to measure for 30 days, you want to stick to it. Now, let's say you start off small and you go, okay, every day when the 8 crosses above the 20. Now we're in a descending moment in the market. So you would be wanting to actually trade the trend, which is right now, it's bearish just at the moment. So that's a whole other conversation. But let's say that every single day you're going to take the 8 above the 20 and you're going to buy 1 contract on the SPY. You need to have a strategy of taking profit. So if you're going to be ultra conservative, you want to, let's say you take profit at 20% and you cash out and you wait. And if the following day, the 8 does not cross above the 20, it actually is beneath the 20 and it comes back up, but fails to cross and it goes lower, you take no position, because your trade plan is to take the 8 above the 20. But what you don't have a trade plan if you change the amount of money that you put at risk every single time you go and take a position. You don't have a trade plan. You don't have a trade plan if you have not predetermined how much you intend to lock in when you get there. So let's say it's 10%, you lock in 10. If it's 20, you lock in 20. If it's 30, you lock in 30. You don't have a trade plan if it looks like it's going to cross up and you get in and then it immediately crosses back down and you hold it. You have to know, how much am I willing to lose on each of my risk decisions? So if I got this wrong today, do I get out when it's negative 10%? Do I get out when it's negative 20, when it's negative 30? These are the components of a trade plan. Does that make sense?
Yes.
And they don't get adjusted based on your thoughts on the market. They don't get adjusted based on how bullish or bearish you're feeling, and they don't get adjusted based on yesterday's success or failure. You write them down and you stick to it, and you do the same thing over and over again, and you measure your success at the end of the week. And trust me, if you did that, you would learn what you were doing wrong. You would learn how you are sometimes your own worst enemy. You'll learn that you actually have a trade plan, but you didn't follow it. And you'll learn a lot about yourself. And you can start with one contract. And if you do well for a week, I would say 30 days, stick to the same trade plan. But if you did, well, let's just say that we did it over the course of 30 days. If you did well for 30 days, then the next month you could do 2 contracts. If you did well for the next 30 days and you grew your account, then you could do 3. That gets adjusted based on success only.
Yep. Another question, Josh, you need to explain to them, because others was like, how come Josh is up 20, 30% while I'm only up 2 to 3%? So I always tell them that position size changes that profit percentage.
I'll be available in 5 minutes, I promise. Bye-bye. Sorry, Miss Mary.
So it's okay. I'm sorry. I know you gotta go. Last questions is, they were asking why you are earning like 20, 30% while they were like, oh, and then I told them it's more position size.
Yeah, it's the same reason why other people, when you sometimes see me say that I clocked in 20% and then somebody else says I got 80, they didn't get a better position than me. They chose a different contract than me. The further out of the money that you go, the more potential percentage move. It's higher risk. It's going to be a cheaper contract, but it'll respond more to a move than a contract that's in the money. So it could be that I've chosen ODTE and you chose next day expiration. Those would have 2 totally different percentage moves. It could be that that you chose an option in the money and I chose an option out of the money, but it's just entirely related to the option you chose.
Okay, what about position size, Josh? Because most of the time I see it's more position size. You have bigger position size compared to others.
I don't know if I understand the question. Could you restate that to me?
Sure. Position size, like I know you will make profit, you will gain more money if you have bigger position size compared to having.
I would love to comment on that.
Yeah.
So and I don't recommend this. There's a journey. It starts with taking small position size. Okay. And actually the journey for the majority of investors here, because they haven't practiced trading a specific trade plan, like 8/20 every day, or cross above 60% on the RSI on the 5-minute chart. You could literally just do that. Every single time we cross beneath the 40 on the 5-minute chart on the RSI, you go short, because that's super bearish. And every time we cross above the 60 on the RSI, you go long. You could literally use just what I gave you as a daily trade plan. And if you stuck to the exact same trade plan, what you're going to do is you're going to find that you panic a lot, because we all have emotion tied to money. All of us do. And the more money, the more emotion comes out. But the what you're going to find is that when you get better and better at the charts and you really dial in your ability to read them correctly, you're going to find that you go from initially taking small risk, looking for big returns. You're going to then have more confidence in your charting, and you're going to put more risk in, looking for small returns. I'm at the point where I'm putting in big money, and I've been at 20%. My expectation is a 20% return, but I have a big position. But my positions are so big that I would do very well and make tons of money if all I got was a 10%. You follow me? And the longer you do this, the bigger your position size and the smaller the percentage win you're expecting. When you start off, there's people out there who are looking for home runs. They're not really good at the charts yet, but they want to take one call and they'll just hold it like, oh man, I'm up. I'm not going to cash this in until I'm up 80% or I'm up 140%. And you can do that. And sometimes things will move and the market will give that to you. But the longer you're in this game, the bigger the risk and the smaller percentage you're going to work for. The earlier your journey is, you're going to look for the smaller risk with the bigger return. And if you actually develop a trade plan and you work it for months and months and months, you'll eventually notice that you're getting very consistent and that you could put more money at risk. But to do that and to still feel comfortable, you're going to lock in smaller gains.
Yeah, I think the reason why most traders, or at least most beginners, fail is because their lack of consistency, right? So the moment that they win, they got that luck, they got that what do you call that? High motivations, like they get overconfident, and then
The
here comes
adrenaline and the
exactly, and then the
Yeah.
market humbles them, and that's when they start failing, and they will, like, emotions comes in and say, you know what, I'm not going to trade this anymore. But they forgot that failure is part of your success, guys. It's really part of your success. If you fail, you got to try it again. You have to try it at least 1 month, like just what Josh is trying to say. One failure is part of your trading. It's not going to be just 1, 2, or 3 or more. So we just really need to be consistent on trading. You know, just like Josh said, you got to try in 30 days and see how your strategy works out for you.
Miss Mary, I'm going to need to go. I've got dinner plans with my father-in-law, and
Nice.
he's old and doesn't want to wait.
Well, thank you, Josh. It's such an amazing day today for everyone, and especially for me. I really enjoy your presence, always being with me. It's really, say hello to your wife, and thank you. I know you're very busy, but I appreciate you coming here today.
Well, thank you for having me, and I absolutely look forward to attending another one, which I will do in the next couple of weeks. And I just want to wish everybody a happy Thanksgiving. We're gonna look to make money this week, but I also think if you can't slow down the week of Thanksgiving and spend a little time not looking at your phone, then you're missing the whole purpose of us chasing this paper. All right, guys,
Exactly.
I love you.
Thank you,
And
Josh.
I'll
We
see
love
you all
you.
later.
Thank you.
Thank you,
Bye-bye.
Josh.
Thank you, guys.
Okay, that was a nice time with
That was
Josh.
that was some quality teaching right there.
Of course, of course. So as you can see, I've taught you guys multiple times on the fib level. If you guys still did not get it, Josh has a class on a Saturday. Use that link. If you're part of the Discord, please use the Saturday link and it should be there. Learning how to do Fibonacci retracement, Fibonacci extensions will definitely help you with your trading journey. One of the proof of that is Tom. Tom has been so good on that Fibonacci. I've taught him Fibonacci retracement, Fibonacci extensions. Those are helpful indicators, but using it correctly is the key, right? So using your Fibonacci retracement is the key. And what do we use Fibonacci retracement for? Tom, go ahead. What do we use retracement for? Why do we use retracement?
Retracement because you want to see where there's going to be a good entry point, right, when the stock's on a downturn.
That's right. So you use retracement for a pullback. Let me see if I could be able to share you guys my
And
screen.
it works, guys. Like Josh was showing. Mary taught me this. This was a game changer for me.
Yeah, give me 1 second. Let me just trying to exit out this thing. I have so many screens, so give me 1 second. Put that slow. And let me show this screen. Hold on. Sorry, guys. I just have so many screens. Can you guys see my screen?
Yep.
Okay. So let me go over and give you guys a very quick, I mean, the trend and the range is pretty self-explanatory. So we discussed about that already. We say that we have a rally, lower, higher high, higher low, higher high, higher low. That is a trend, and it continue higher high, higher low. And then normally after the third rally, that's when we ended up having a lower low, and right here we created a higher low. What does that mean is, hey, we're slowing down on that rally. Perhaps we need to do a range, or we need to calm down and rest, right? Before we actually create another rally. Somebody please mute yourself. So right now, this is another trend for Bitcoin, right? But for example, you would like to see Bitcoin's pullback, right?
Excuse me, Miss
So
Mary.
you use, Go. Give me 1 second,
I
Anthony. Let me
I
teach
can't
first.
see your chart.
You guys cannot see my chart?
No, there's a chart up, but it's just frozen.
It's very
Yeah,
small. Yeah.
It's really hazy. That's
All right.
Yeah, it doesn't look
looks like some
It's blurry.
internet connection.
All right, give me 1 second. Is this better? I'm moving it.
much better.
Okay,
This,
this
yeah.
one's better?
Yes, it
Okay,
is.
give me 1 second. It's just so many screens on my end. All right, so Fibonacci retracement, we use it for a pullback, right? Is this pullback is healthy, right? So by the way, we're just jumping from rally and range. Before I go to Fibonacci and review this, do you guys have any questions on the range? No. Okay. So I guess everybody understand what's a range. A range is when the candles move above the move from the resistance and support, and after a breakout, that's when we see the directions of the trend, right? So this is a range. After a rally, right here, after a rally, create a higher high, higher low, higher high, and then we ended up having a lower low, lower high, and then we are in range, right? This range breakout, so the market decides that, hey, we're not going to continue to go down, we're actually going up. So this is a range retesting of the breakout level, which is here. Sometimes, remember, we treat the support as an area, not just a single line, right? Not a single trend. So if other people say, Mary, but did not touch the trend, but that's actually part of the support, right? It's part of the support using this candle, or you could say half of the candles always serve as a pullback. So that's what happened. It's always retesting. And when you see that retest of the breakout level, that's actually a cue for a big rally to the upside, as long as we didn't get a fake out. So okay, that's the range. And then this is the rally or a trend to the upside. Let's go ahead and talk about Fibonacci retracement, right? Fibonacci retracement is we use it to see or how much after a rally pull back, right? So we're going to create we need 2 points. We need higher low, no, lower low and higher high. So this is the first rally. We would like to see how much is this retracement. So based upon this level on Fibonacci retracement, Bitcoin actually pull back on the golden ratio. So Josh was explaining to you guys between the 50 and the 60, which happens to be a great pullback. The golden ratio is a 61%, meaning after a rally, this one retraced 61%, which most traders would love to see that 61%. Why? Because when you enter this position, you have a bigger profit compared to waiting for the 50. But if you wait for the perfect market to happen, that we are going to wait that 61%, it may not happen. Okay, so you have to trade what the market gives you. Sometimes we have a short pullback because this strong rally is just giving you Josh called it a shallow, I call it a short pullback. So it could just give you or hit that 38%, right? Which is still a good pullback. It means this rally is pretty strong, but it could retest that 50 to 60%. And if you see that, that could be a buying opportunity, right? So, but you cannot just use Fibonacci retracement alone as an indicator of your entry point. Here comes your what? RSI. Here comes your another one, EMA, those things. Because if you use just one indicator for your conviction to either to go up or to go down, then that might not be a good way of trading. Okay, you got to have a strategy, right? You gotta have confluence. But if you measure it is just for you to see how long is that rally, just use your Fibonacci retracement, right? So we start from the top and all the way to the bottom. Same thing here. There's 2 ways to do it too. By the way, you could use Fibonacci retracement in any time frame. But if you would like to see a bigger picture of that rally and you want to measure that pullback, of course, what time frame are you going to use? Are you going to use the shorter time frame or the bigger time frame to see the entire market? You're going to use shorter, bigger time frame, right? The weekly. You want to see if this rally, this current rally, sorry, that's extension. If this rally, I'm going to enter, if this rally pulls back, how far could it go? 51%, I mean 50%. Another good, healthy pullback, 50%. It really touches there. So, and by the way, this is also a rejection. We may get faked out here because this is a bunch of rejections here, rejection, 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 and then gives you a big engulfing candle, but it still happens to be a rejection candle. Touches that 50, right? So if you see the candle, price action, these are price action, by the way, these are price action. But if you see a continuation candle, which like bearish like this, then this could not be a pullback. If it gives you a big green candle here breaking below that level, then that is not a pullback. Then that might be retraced all the way to that level of support. Okay, so again, this one you want to see how far that rally had gone and what is the measure of that retracement. Again, it seems like Bitcoin always pull back between 61% to 50%. After a rally, it pulls back between that golden ratio and a good ratio of pullback between 50 and 60. So we haven't seen that 38% yet. So it becomes what? It becomes a pattern. So now let's see this one. This one doesn't look like a 50 or 61%. But how many more days we have left for this? We have 6 more days to finish this candle. Go ahead and delete that. And by the way, how do you use the Fibonacci retracement? You usually use it on the first rally. Use the first rally. So this one, this is what I'm talking about. So after this short rally and it pulls back, this is not a pullback to the golden ratio. So what's going to happen is a possibility of retesting, which is half of this candle serve as a pullback, and that's what it's doing. So now it's going to retest a support, no longer the Fibonacci retracement, okay? But there's ways to use that. There's ways to use Fibonacci retracement. You could ignore this first wick. You could just say, hey, I'm looking at the bigger picture here. I don't want to see this very short pullback. I want to see the highest high and the highest high and the lower low. So if you want to see the big trend, because this is actually the rally of the Bitcoin, right? We would like to see if this is really going to be a pullback. Maybe it's just going to happen the same thing here, the same thing here, but this one fails actually to copy the previous pullback. This was 50 and 60, same thing with this 50 and 60. But if you would like to measure the whole market, you could start from the bottom of that trend and drag it up to the top. So this is 38%, which is what? A shallow pullback. If this is a really the big rally of Bitcoin. So it's just a short pullback and a possibility that it could return from here. Or we could see 72,000 all the way to 59 by size. I did not measure this correctly, okay? Not like a precise. So this is what I'm talking about, like the price action, okay? So price action, this one is price action. So all this is price action. You want a rejections on those levels to consider to be, yes, there's a pullback instead of a continuation, okay? So this is just a very short summary of Fibonacci retracement. By the way, Fibonacci retracement is not only for a uptrend, you could also use it on the downtrend. Like this one. Let's pretend that this never happened, right? Right here. And you want to see after a downtrend, it pulls back from here. You want to see how far this, after a downtrend, how far is the pullback. So you want measure it from the highest high to the lowest low. And as you can see, after a downturn, then it pulls back to that 38%, which is a short pullback before continuation to the downside. So if from the uptrend, you start from the top, because it's the uptrend, you start from the top, right? You start from the bottom to the top. That's for the uptrend, right? But if you're measuring the pullback of the downtrend, you start from the top to the bottom. One second. So it's right here. This is the first downturn, and then pulls back and then rallied to the downside again. So you start from the top to the bottom for the downtrend. And then for the uptrend, you start from the bottom to the top. Okay? That's a quick recap of your Fibonacci retracement. And you could also go over that to Josh. Josh has a Saturday class on the Fibonacci retracement. All right, so let's go ahead and talk about Tesla real quick. And then we are done for the day.
Miss
Tamim?
Mary, real quick, can I ask you a quick question regarding the fib retracement that you just did a while ago? The last one that you did on the downtrend, I noticed that you didn't go to the bottom of that candle on the downtrend. Is there a reason for that?
Yeah, I was trying to measure the downtrend and a pullback. See if this pullback actually is a pullback after a downtrend. So, because do you see you have the down and then retrace and then down and then retrace. So I'm trying to measure this pullback here because this is a downtrend and you want to measure the pullback after a downtrend. Run, pullback, run, and then is this a pullback? This happened to be not a pullback. So if you are in the downtrend, let's say this one is continued to fall, and then you say, oh, maybe there is a recovery here. You will get a fake out. Yeah, because there is a morning star pattern in here, Mary. So it's going to go up. It's going to go up. So, but what happened? You ended up having an engulfing candle after a morning star pattern, which did not confirm the morning star pattern. So what do? You measure it from the top to the bottom and see if this is a short pullback before a continuation to the downside. You will not be able to see this. You will not be able to see this, obviously. You're just going to measure the downtrend. You want to see if those pullback after a downtrend will respect the 38%, the 50%, or the 61%.
Okay, understood. But in the example that you showed us, though, there was another red candle, and you stopped above that.
When it
So that was my question, though. I was wondering why you didn't take it all the way down to that last red candle, since that was the end of the pullback.
you can use it.
Okay.
You can use the lowest low all the way to the highest high of the trend. Right? You
Okay.
can use that. It all depends on you. It all depends on your technique. How do you use your Fibonacci retracement? But it's okay to use it the lowest low. If you take one of the class that what is that class that I took? They pick the lowest low of the wick and the highest high of the wick. What I do sometimes is I don't follow that. I use the first rally of the green and all the way to the top, to the highest high. I don't normally use like the red one because I feel like the first rally starts with the green candle, not the red candle. So I'll start with the green and then highest high, whatever wick is at, regardless of the color, either red or green. I need the highest high. So either or, you could pick the lowest low of the wick, regardless of the color, or you could start with the first green after a downtrend. You could use the lowest low of the green candle and then push it up all the way to the highest high. Doesn't matter.
Thank you. Thank you very much.
Okay. Any more questions?
Mary, how do you measure the percentage? Like how much down it has gone?
Yasha, those are default. Those are default, Yasha. When you use a Fibonacci retracement, those are default. Let's example this one, right? So these are default. It's already on your indicator. So you got 38. You mean, how do you measure? You could unclick them. The common use for traders, the level of Fibonacci retracements is that 38%, 61%, and the 50%. So those are the three things that you actually just need on your Fibonacci retracement. You don't need the rest because you just want a short pullback. You want to use a 38%. You want to use a 61%. If you use 78%, normally I've seen a pullback of the 78% on the crypto related stocks or crypto because they're very, very volatile. So the 78%, sometimes I use it for crypto, not for stocks. That 23% also, once again, I use that 23% for crypto, not for stocks. It's very volatile. The crypto is very volatile, but you're more than welcome to do it. I don't use it for my stocks. I only use 38, 50, and 61.
38. Okay. I think is this the same thing when, like, I think last week you were on live or something and you were trying to measure like a stock. I think it was Tesla. Tesla came down like 5% or something. How do you measure that? Like, oh, it came down to 5%. Either you or was it Tom? One of you guys. You just you just clicked on one of the indicators and you measured it.
I'm not quite sure if that is Fibonacci retracement
No, it was
question
not.
related. Okay, Yasha. So you're jumping to another question, Yasha, that we have to stick to
Oh, sorry,
Fibonacci
sorry.
retracement. Okay, so I'm not quite sure what is that 5% coming from, but in regards to Fibonacci retracement, we have 38, 50, and 61.
Yeah, that I'm aware. Like we can, I remember you teaching us, and then this one also. But I think that was another question which I wanted to ask. Next, how do you do volume? Like, how do you check the volume, the volume bars which are at the bottom? Like when
You
we
mean
say we need to look at the volume, but
how do you measure the volume? Using your indicators on the volume right here, and then you just put the candles there, and they will tell you how much is the volume of that right here. You
oh, that's
take a look
okay.
at this. You see this volume?
Yeah,
They will tell you. So put your cursor on that particular volume. It'll tell you that's about 31,047
got it.
volume in there. Okay, and then your EMA. I think this is. I'm not quite sure what. Let me see that is your 20 MAs. So your 20 MAs on the volume, but I think this the 20 MA is not available to Webull. Only TradingView has it. Not unless you have to click the icon or you have to click it for you to see it, but I'm not quite sure. But this is your 20 EMAs, and that's the yellow color. So you click on the cursor, you see the yellow one is your 20 MAs, and the red one is the full volumes of that particular histogram of the volume. Okay.
Okay.
I'm sorry, Miss Mary. I have just a quick question. I use A plus Scout setup by Josh for 3 tickers, but just in case I'm going to trade any other ticker for day trading purposes, can I use the same values for Fibonacci retracement on those tickers?
Of course, you could use Fibonacci retracement in pretty much every time frame or any ticker symbol.
The
Yeah.
method remains the same, even if it's a 5 minute?
Yeah, absolutely. You just have to make sure you know how to put it. You just pick the first rally, you pick the highest high, the lowest low, the highest high, because if it's uptrend, and if it's a downtrend, you pick the highest high, the lowest low.
Mary, can I say something on that? The only problem with that is if you're scalping and if you're using 3 or 5 minutes, the time you're doing your Fibonacci, you're going, oh, here's my entry point. You look over
And it's
and
done.
it's long gone.
Yep.
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 That's the only
All right.
problem with using it for short time frames. By the time you figure it out and look at it and decide you're going to get in, that move could be already gone past.
Yep. Mm-hmm.
It really works better for 1 hour and above, to be honest.
It's true. At least 30
Okay.
minutes.
So
Yeah.
probably drawing that Fibonacci retracement on 1 hour and using it as a support and resistance on the smaller time frame. I think that would be a better idea to go about it.
I'm not quite sure if that's a good way to identify your support and resistance. Yes, you can in a way, but you just want to, the retracement is good for, yeah, you could use it for the support and resistance, but that's a good way to only see the pullbacks of a possible entry. Yeah, it's the support. As long as you know how to identify that level, then yeah, go ahead and do that.
Okay.
Right? For a
Okay,
question.
thank you.
Mm-hmm. And for what Tom is saying, it's true what Tom is saying. If you use a Fibonacci retracement using a shorter time frame, by the time that you're trying to enter a trade, you already missed the opportunity.
Okay.
Mhm.
Sounds good. Thank you so much.
Miss Mary, can you tell me what will be the next support for Bitcoin?
Currently right now, the support for Bitcoin is actually lies. Well, let me see this one. 80%, $80,000 is actually one of the key support for Bitcoin. Let me just tell you that. If we use candles by candles, we're trading candles by candles. This is actually one of the good weekly support for Bitcoin because of this. Because of this.
I have no idea how well it did.
Because of this big candle here, right? So $80,000 is a good level of support for Bitcoin. However, if we cannot hold above that $80,000, we're definitely seeing 78 and 76,000, that's one of the support back then on, when was that? On March, right? So these candles here will serve as a support. So 78 and 76,000 is on the table, which could actually extend to that 74,000. So if we cannot hold this 80,000, which we're trying to form another red candle. The goal for this, if we hold at least above $86,000, then we could say this is a possible rejection, right? But if we cannot hold that $86,000, then we could definitely go back and retest 83,000 to 82,000, go back again to 80,000. Then you got the 78, 76, 74. And this is going to serve as a key level of support again. Why? This was the lowest low of that wick, and this happens to be half of this candle. This could serve as a pullback. So if we cannot hold that, and it's on the table, by the way, it's really on the table. We're just waiting for this candle. What is it going to do? Is it going to be red and fill up the bottom of the wick again? Or we're going to at least retest that 90, 88,000 again? Are we? Don't know. Don't know. But right now, this is just a continuation to the downside. Still continuation to the
Yeah.
downside. So,
Thank you.
So, but before we actually respected this level, so hopefully it will go back. If we're following the M pattern before, this one did not touch the real level of support after the second, this is the first leg, this is the second leg of the M pattern. It did not touch it. If history will repeat itself, you may not touch the lower bottom of the leg 2 for Bitcoin, but it looks like we may. We may definitely touch that 78 to 74,000 of support. And if we fail to hold at $78,000, let's see that's some MAs, by the way. Because don't forget to use your MAs. Your MAs will help you, gives you some type of support. So MAs is right there, so that's too much. We just failed 325. We're so bearish on the shorter time frame, but on the weekly, we're approaching that 200 MAs right here. When we see the last time we touched, we never, no, don't say never. Okay, the last time we start was 2023. When did we fall? June 2022, when we start falling below and start consolidating, just consolidate between the 200 and the 325 MAs, right? We never fall below here. I mean, this still is not falling. This is just saying consolidating or just being nosy. It's still hanging between the 325. So if we ever touch the 200 MAs on the Bitcoin, which happens to be, I think, like 59,000. Let me see. 55,000, I don't think. I'm not sure. Nobody knows if it ever. But if it ever touched that 200 MAs, we're going to be vacillating from 200 MAs in that 325. And then we just, after that, we recover, break out of that 200 MAs, and still consolidate within that range. So it took, how long after we fail? June 2022, and we start recovering October. So about June, July, August, September, October, about 16 months to actually recover after we failed at 200 MAs. It's not happening yet. After that recovery of the 200 MA, we did not touch 200 MA at all. We tried to go and tried to touch and reclaim that again. It did not happen. This is still far, so we're still pretty far in here. So I'm not seeing it yet. I trade candle by candle, so I'm not so bearish on Bitcoin and I'm not so bullish on Bitcoin. But if you're looking at the shorter time frame, definitely bearish, definitely. But if you're looking at the monthly and see, okay. What happened? Okay, so with Bitcoin, guys, this is being
recording in progress.
This is being recorded, guys, via live, so you don't need to record it. You could just retrieve it using a YouTube channel. So for Bitcoin, we always have one red candle, right? After it, we're using a 3 months. We have a one red candle. Yes, this is a increasing candle after a pullback. We have a small red candle, we have a medium, large, and then we have an extra large, right? So same thing happened here back then when we ended up having a large candle. So with this tweezer top on the Bitcoin, with that tweezer top on the Bitcoin, as you can see, since we had a rally after reaching that $61,000 and we are way overbought on that, we ended up having a wide range of bearish divergence, right? And the only way to find out if we will continue to fall and confirm the bearish divergent is you need to draw, it's going to be a very steep trend line, very steep trend line. But we do have a wide range of bearish divergent. What is a bearish divergent? When your candle continue to go up or your price continue to go up and your RSI goes down, it's pointing down. This is your highest high for, where is that? Right here. This is the highest high for the RSI. And then this is actually lower. You see, this candle goes up, but your RSI is slowing down. So that is a wide range of bearish divergent. So in order for you to monitor where's Bitcoin is going, if we cannot hold on to this trend line here, then you're going to see Bitcoin falling more. So this will serve as your dynamic support because right now we are still trading above the trend line, still bullish. But this is a this is a tweezer top actually. This is a rejection right here. This is a tweezer top. It happened too before. They had a tweezer top on October and January. That 2 months they had a tweezer top, but it ended up having an engulfing candle. So if this will be the bottom of this trend line and we don't fall below that trend line, then we might have a bigger rally of Bitcoin. But right now, we're just hanging on to that trend line. So watch your trend line using your monthly. That will tell you where Bitcoin is going. Okay, so right now we still have some 6 days to finish this candle. So if we fall below this, and then you know where Bitcoin is going. Right there. Okay. So use your trend line, just copy what I just did using a 3 month monthly. Use your trend line because that serves as your guide for your bearish divergence. Fall below that trend line confirms your bearish divergence. Okay, I think we are done. 8:30. I know I did not go over so many technicals today because this class is actually a technical analysis. Well, we teach you, but I could give you a technical analysis for one more stocks, and let's go with favorite Tesla.
Mary, before you go, do your trading view discount code.
Oh, yeah. This is nothing about affiliation for TradingView, okay? So I just have a regular TradingView. And, to those people, hold on, leave the page, who needs to buy TradingView, this is a perfect time for everybody. This is me and Ertuan, and maybe Tom start advertising it too. This is the time where we tell you buy your TradingView because it's either 70 or 80%. If you wait after Black Friday, you're gonna end up paying a normal price of TradingView. How much it costs?
I just paid $217 for another year. That is super cheap.
Yeah. See.
Yep.
So
Are they stacking on that on top of your already?
Yep.
They are. Okay, I was
So
wondering about that.
Yeah, so I pushed mine out. I pushed mine out D to like 440 days.
I agree.
Okay, awesome.
Same.
I was curious about that.
Yep. So go
Just
ahead.
keeps adding to it.
Exactly. That's right, Mia. So she said keep adding to it. It's true because this is 70%. So, oh, Mary, but which one is the difference? Come on, guys. Only $1 difference. Just might as well pay for the premium, right? So it gives you
Well,
more.
you need the premium so you can get the multiple alerts.
Yeah, absolutely.
Yep.
So it's only $1 difference. So go ahead and use premium. It's $217. Others may not be able to afford it, and then you could go ahead and use the essential, which is 126. But if you use a monthly, you don't get no discount. You have to pay the entire premium of $217. I'm not affiliated with TradingView, by the way. I'm just using their premium or refer a friend, and you get like $15. I get $15.
Yep.
So that's what I'm just using. So please let me know. I'll go ahead and share it to the screen. Let me see.
And one other thing, I see a bunch of questions. Real-time data, TradingView, you have to pay for real-time data.
Yeah, it's extra.
If you run it. Yep. And I do it. It's $10 a month, guys. $120 a year. One trade pays for it because I use E-Trade, and I noticed it was 5-6 seconds difference, and that's a lot, especially if you're trying to scalp or day trade.
I agree.
Really? Does it really help though?
Oh yeah, because now I can. I used to sit here and watch. Why is E-Trade telling me my price is at this and trading view is at this, and I miss trades or miss getting out on trades.
I don't know
Yeah,
that.
because I was
Yeah.
watching the trading view charts,
Oh, I,
and yeah,
if you're gonna ask me an Airtwan, I don't use it. You could use
yeah.
it. Yeah, you could pay extra. I don't use it.
What package are you using, Tom?
I have that one right there, the premium.
The premium? Okay.
Yeah,
That's what I have too, yeah.
that's because I like to have like 6 charts on one screen.
Yeah,
So,
I've got 4 screens. I know all about that.
Yeah,
yep,
yeah,
yep.
you could use the live trading. It's only a live. I'm sorry, the real time. It's only $10, but I just don't use it. I mean, if it helps you, go ahead and use it, or you could try it, right, Tom? You could try it.
You could try it.
Yeah,
It's a month to month. You don't have to pay for it.
yeah, yeah, absolutely.
Yeah,
So,
Money Mike uses it. Actually, Mike was the one who told me that to get it.
mhm. Yeah, so but yeah, perfect. This is a perfect time to buy your trading view. It's very, I mean others, I'm not gonna say affordable, others may not be able to afford it, but please invest on trading view. That will, so that you could be able to see where the chart is going, right?
It's probably the best charting tool out there.
Me too. I think it's friendly users is it's really user friendly. Excuse me, user friendly. It's very easy to use. If you have problem, I could help you, or Mike could help you. Everybody could help you. Okay, so you're right, Mia. She's right. Invest on yourself, right? What they say: if you prioritize knowledge and intelligence, money will follow.
Yeah.
Right?
Well, what's the other one? Airtwan always says the best investment you're gonna make.
Use yourself.
Yep.
Yeah, is yourself. Okay. Can you do paper trading on TradingView? Good questions. I just don't use paper trading, but I think
Yes.
they do. Yes, they do. They do have
It's
that.
down in the bottom. I think it's the bottom left. You can. It's all the way at the bottom, and you can hit it, and it'll bring up
Would you like
paper
to share your
trade.
screen, Tom? Just talk to
I'm trying to
people.
find it here. Hold on,
Yeah.
before I do. My wife's cat keeps walking in front of me. She's driving me nuts. Get out of here.
Is this price for the whole year or?
Yeah, that's for the whole year. That's for the whole year. That
Oh, no,
$217.
don't.
And then what happened is you could roll over. Let's say you have your current subscription and expired next month or 2 months. It will roll
Wow.
over. And to those people who cannot afford the whole year, perhaps you could do a monthly. Try to use I just suggest for you guys to have a TradingView access to it. If you cannot afford it, perhaps use the free one. It allows you to have 3 indicators.
May I ask, how do
Mary,
you renew
Mary,
it?
did you want me to show that, Mary, real
Yeah,
quick?
yes, please share your screen. How do you
Yeah.
renew it? All you have to do is just click on your that says explore more. Tom, go ahead and share your screen.
Yep.
Yes, if you're beginners, I highly suggest to start paper trading first, especially with options, okay? If you use your own money on options and you're trading with Josh, yes, there's a high probability of profit and success, but you also have probability of double the possibility of losing faster, okay? Especially Josh uses YouTube via eCam and there's lagging of 2 to 5 minutes. Hold on, share. Let me go ahead and share. Tom.
Yep. So, can you guys see my screen?
Yes, let me just.
But the problem with the using the paper trading is you have to have the discipline to treat it just as you are
Yeah.
buying with your own money.
Yep.
Otherwise,
Yep.
it's meaningless.
Yep.
Yep.
Josh, Tom, we're seeing your Google. So, Tom, what did you find on that 820, 921?
Oh, so well, because I saw people asking about it, right? So I literally went to my best friend, ChatGPT, and said, create a PDF for me on the 820 strategy. It basically 820, 921, it's the same, right? I use 921,
Yeah.
9 EMA and 21 EMA. Josh uses 820.
Yep.
It's the same. Oh, you know what? I was looking at the wrong screen. Sorry. Hold on. Here we go. Yeah, so I just, cause that's why you asked, cause you saw that. I basically, I went to Chat GPT and said, hey, create me a PDF for it. And I threw it in the Zoom chat so everybody could grab it.
Yep. So
Yep.
there's no better EMAs than the other. If you're used to using 813.21, it's okay. If you use 920, it's okay. If you use 921, it's all okay. It all depends
Yep.
on your strategy, guys. If you've been trading it for years and it works for you, go ahead, use it. You could use 5 EMAs too. You could use 10 EMAs. It all depends on your strategy. As long as you use it constantly and you're disciplined about it, go ahead. And you gotta try using those things anyways. You know, if somebody taught you to use 9 and you like it, go ahead and use it. It's nothing, there's no black and white on that. Go ahead, Tom. We see your scribble
So
chart.
for paper trading, right, you go to your trading panel and it's right here, paper trading. And you just click on it and you could do paper trading, right? You can then go in here and do your orders, you bring up your stock, you got $100,000 of monopoly money to play with. And honestly, if you go to TradingView's YouTube channel, there's a ton of videos on this. That's actually how I found it originally. And go in there and just play around with it. It's a great tool to use, especially like Mary said, for if you're just learning how to do options trading, man, trust me, you don't want to be playing with your own money. I've done that and it sucks.
Yeah.
Excuse me, Ms. Mary, I have one question. When is the class on Saturday that Josh, that was on Saturday? What time?
That is a Discord class every Saturday. What time?
Do you know the time?
I think it's 12 o'clock, right? I
Yeah, I
thought
think
they
it's new.
changed it.
New
Ertwan, I thought he changed it.
No, he's still at noon.
Saturday noon?
Eastern time.
And it's
Yeah, Saturday
recorded.
noon.
Yeah, and it's recorded.
Yeah,
Actually.
you guys go to the Welcome to Discord channel, and it's in there.
Okay,
It's
thank
in
you.
there, so if you wanna
And
go back.
last Saturday, yesterday, he talked about Fibonacci.
Mm-hmm.
So go and review his videos.
Yep.
Because I can't
Excuse
join
me?
Saturday classes.
Yeah, it's on the calendar.
Yep.
And
Can I ask you a question?
go ahead.
Excuse me, Thomas, Miss Mary, how accurate is the fib or other indicators when we are using them on charts?
How accurate that is.
I
I
think he's
believe it
asking
all
like what's
depends on your confluence and confirmation, right? All indicators are lagging, right? All of them. Honestly, the more indicators you put in your chart, the more clutter it gets, the more it gets confusing on your chart, right? If you use a Fibonacci retracement, that when you mean accuracy is it's one of your tool to assist you if this pullback will respect the pullback, and if you see any kind of reversal with the price action, then take it, right? Your indicators is not something that you use alone. You have to learn knowledge of technicals, meaning like candlesticks, patterns, things like that, because that will give you an extra confluence. If you use one indicator alone to trade, then you don't have a conviction that this trade will go to your favor. Does that make sense? All indicators are just lagging. It's just an assistant for you. It will just help you to say, hey, is this pullback is healthy, or is there any kind of rejections? Okay, so don't use just one indicators, or just use Fibonacci retracement as a guide for your pullback. What if it falls? Because I know you're going to be using the Fibonacci 50 or 61%, and right away you got to enter, right? Because it's respecting the 50 and 61%. And then guess what? You did not wait for confirmation. This thing plummeted and go back to the second level of support. So not using just one indicator doesn't mean that it will go to your favor, you know? Hold on. So I don't know if that helps. Tom, is that your screen or my screen?
That's yours. I stopped sharing.
Let me go ahead and stop sharing now. So,
And Tom, I have a quick question. Can you do the paper trading on TradingView, or is just the stocks you can buy and sell?
Say it again, Rajeep.
Can you do the options trading as well on the trading view, or it's just the stocks you can buy and sell ETFs?
I believe you can do options. I haven't tried that yet because I have always done all my paper trading on my E-Trade account.
Okay.
That's a good question. I see. I don't. You know what? You can't. I know. Mary and I had this question come up. It because it doesn't give the options list, right? It doesn't give the
Yeah,
options. Yeah, it doesn't
that's
give
what
it
I
enough.
remember, but I just
Yep.
wanted to
You
double
can.
check.
That came up before. Yep. You can only do stocks itself. Yep. So you can't do options on the paper trading on. So if you're a regular broker, you should be able to. Like with me with E-Trade, I love their paper trading because it lines right up with their, the regular brokerage trading.
Yeah.
Yeah, I use interactive brokers, so
Yeah, same thing. Yeah.
Hey Tom, is trading you available in Canada?
yeah, interactive broker is best brokerage in Canada.
Mm. Yeah, so if you guys are new traders and you're doing options right away, more power to you because you guys are too fast for a beginners to start on options. Okay?
Yeah.
You should not. I'm not a financial advisors. We are not financial advisors, Tom, me, and Airtwan. We don't suggest you start with options if you're new beginners, especially if you have no technical knowledge. I believe you should start with shares first and paper trading instead of using your own money. Because the key first to trading is not making profit. Trust me, that's the last thing you will think of trading. The key to success to trading is consistency and discipline. It's your discipline, it's your emotion. You have to get rid of your emotion in order for you to become successful on trading. Okay, so if you guys trying to chase money, money will always run away from you.
I'll double up on that. Even if you have some experience trading, and if you're trying out new techniques, like I'm not good at like what Josh and Money Mike do, right? With the fast trading. I blew it last week on a couple of trades, so I said, you know what, I'm gonna switch back to paper trading just to practice my techniques. If you're gonna practice, if you're trying to hone your skills, why risk real money?
Okay,
I kind of I got ahead of myself last week.
I
Screwed
think
up.
Tom, I believe that when you say negative things about yourself and you tell yourself your weakness, saying I am not good at this, guess what? You believe on that. Your mind believe on that.
No,
Whatever
it's
you say.
for me. For me. It's a this is what I need to work on. Let's put it that
Yep,
way.
yep,
That's what I
yep.
need to work on. Yeah, yeah,
Yep.
yeah,
So,
yeah.
one failure doesn't make you a failure, okay? It makes you learn from that. So, I'm actually happy that you do start paper trading, but don't be afraid of scalping because the scalping is one of the great skills to earn small profits and stack up together. Those
Yeah.
are the fast money. This is trading, okay? This scalping is not investing. Investing and scalping and trading are two different things, okay? Scalping is part of trading, but investing is different things. So scalping, you win, you make profit, you make that small wins stack up together. You add it up and you could actually create your goal in a day. Let's say your goal is $500 and the fast way to make money on that $500 is basically to scalp. But guess what? If you don't know how to do technicals and you have no strategy and you're just going because I believe that I'm going to make money, then that's called hopium. That's not a strategy. Josh was just talking about strategy that if you're using just 8 and I believe 9 or 21 or 8 or 21, if you
He's
use
ace
that
20.
8 and 20 strategy and then confirm with your RSI, if you believe that that'll work for you, you have to try that at least 1,000 times or 30 days, right? You have to try that strategy. One failure, yes, it's gonna you're gonna feel so down and no motivation because you're lost on that particular trade. But dude, you gotta try that 30 days. Einstein did not create the bulb in one time. He failed 1,000 times. So why can't you, right? We
Hey,
all got to
Mary, here's
learn
a
through
good
it.
question for you. Tobest, he asked a question in Kingdom Class about which is better for new people to trade stocks versus options, which you just covered, right? and why everybody talks about options all the time.
Okay, options is very, very interesting. Why? Because you could make fast money and big profits on option very quickly, very quickly. But guess what? We forgot the downside of that. And what is the downside for options if you're new beginners? Go ahead, Tom, and answer that.
You lose the whole everything you put into it.
Yeah. Have you guys heard
100%.
about the new beginner's luck, right? So when everybody's beginners, right? And I'm one of them. Back then, a couple years ago, I could make $5,000 in a day. Oh, guess what? I could do this. And the market humbles me, right? When I know nothing about technicals. And I was making money. I thought I would be able to quit my job and make money. And guess what? Market humbles you. I don't know anything about bearish trend. I don't know anything about stop loss. I don't know anything about rejections. And I'm doing options. And it blew me away. I cried. I'm not showing my husband that I was crying because I lost, right? So just because you saw other people making a lot of money and it looks so attractive and you're going to go for options, you're going to come back here and tell me, Mary, I need a coaching 101. And guess what? I'm more than welcome to help you, right?
Especially if you start watching too many YouTubers, right? Hey, this is my option strategy to make $1,200 a day. You can do it too.
Yep.
Yeah, stay away.
Yeah, and the difference between trading stocks and trading options is when you trade your stocks, there's as long as you trade lucrative company like Tesla, Nvidia, AMD, and if you cannot afford this, there's a ETF that you could do AMDL, you could do TSLL, more affordable. The probability of success of buying shares is higher than doing options. The big difference is the capital wise. You need more money for shares, but for options, you just need within $500 to $600, you could actually trade options. And yes, you could actually make money, big money in options. But the key for options is really discipline because you don't need to own shares when you're trying to trade options. You just need even $500. Even when you do SPY, you could get like $100 or $150.
And guys, the other thing with options, please, if you're new to options, stay away from margin. Right? Trade with a cash account.
Yeah.
It's much safer. You don't get yourself in trouble.
Okay. What is the difference between cash account and margin? Margin is the brokerage lend that money to you guys, and you pay interest for that. Okay.
Yep.
So the cash accounts is yes, you could use it as much as you can, as much as you want, as long as you have settled money on your account. If you don't have, you gotta wait. Most of the brokerage settled that funds within 24 hours.
And if you get caught in that 3-day pattern day trading on a margin account and you're trying to get out of a trade and you can't because you've done your 3 trades for the week, there's nothing worse than watching something either bleed away or your profits disappear because you can't close a trade.
Yep. And also, if you're buying shares or stocks, you don't have to buy 100 stocks to trade. If your capital, let's say $1,000, and you want to buy Tesla, you could only allowed to buy 2 shares. Okay. You're not required to buy 100 shares of stocks in order for you to trade.
Or if your brokerage does fractionals, even better.
Yeah.
It's a good way for people to start off with fractionals too.
So yeah, some brokerage offers fractionals, but I think Schwab's doesn't. Okay.
No, E-Trade doesn't either. It's all the newer ones. Webull, Moomoo,
Yeah.
Robinhood.
Yeah.
Yeah.
So
I can't even sell sometimes fractional shares on E-Trade. You can only sell it a certain way.
And there's a lot of story behind options, guys. Just because you're beginners and you jump in because somebody's doing live trading, there's a lot of story behind the options. There comes your delta, there comes your Greek. So those things are very important. And the number one actually is not those Greeks, it's your discipline and your strategy. So you got to stick to your strategy, okay? So when you're doing options, you really, really have to be disciplined. You have to be fast when you're doing scalping. You have to react fast. You have to be able to exit and in and out right away within seconds, within minutes when you're scalping, because your goal is just a 1 green candle for you to get out. And the most sensible way of taking profit for a scalping, 5 to 10%. You'll be so lucky if you get 20 to 27 or 20 or 30%. I think we were trading once with Tom and somebody had like 27% and he was a newbie. And what do we suggest? Get out, right?
He was like, He was like, "How do I close this?"
Yeah, but you know, that was really good. That was actually amazing
Yeah.
because 27% for a scalping, that's a good percentage for profit to take out.
'Cause I think I got 11 on the same trade. I was like, "You got 27 and you're new? That's great."
Yeah.
Yep.
Excuse me.
Questions about 8 to 20 EMAs. If you're doing scalping and you're doing options, I highly suggest to use 5, 10, 15 minutes. Yes. And the crossover normally happens on the 5 minutes, okay? Yes.
Excuse me. Why
Uh,
on this on the money or out of the money?
Well, that it all depends on your strategy too. So if you're going to trade with me, I would like you to do in the money. But if you're doing SPY with me, I would like to do a 1 day expiration, not a 0 DTE. It all depends on your budget.
Excuse me. Since you're, I mean, you have classes. Is it possible to have a class for the option?
Yeah, absolutely. I do coach for options trading. I actually bring Tom with me because if you do have some questions on the complex options, then Tom is the connoisseur for that. But yes, you are more than welcome to do a coaching with me. We'll go ahead and send the link there. Are you part of the Discord? Okay. Okay, great, great. We'll go ahead and put it in the Discord, and Tom, if you could be able to help him with that, that'll be great. Okay.
And you've got more than 50% of your time left on it, you can go ahead and close it, right? If you want to hold on and get the maximum amount, that's fine too. You can go, but you always risk the chance that what happens, right? The stock starts rising and it's going to break past your strike price and then you get called away. So number one thing is, are you willing to let the stock go at that price? If you are, you can let it go all the way. If you want to keep it, then I always suggest if you're hitting the 70 to 75% mark, and you don't want to wait any longer, you can close it out, and you can reopen another one with a higher strike price.
Yep.
So if
Yep.
I like, if within like a week, if I see like even like 40% off and I just say it's a good enough for me, can I close?
I mean, you can. Yeah, I mean
Well,
that's
the
really
thing
what
is, you have to cough up some of the
you got to give
premium
back.
to
You got to
close
give back
it.
the money. That's the thing, right? That's why I say you want to be more
Oh,
than 50% up. You've got to give back that money, right? So if you made
oh,
$100 and you're up 40%, you're giving back $60.
Yep.
oh,
So
I
yeah, you made
see.
40, but you've got to give back 60. That's why I said 50%, if you're more than 50% of the time left, you can, that's fine. But I prefer to wait till I get into the 70, 75 range, and then I don't want to take a chance that it's gonna, get called away from me. Then I'll just close it out and reopen another one.
I see. Now I understand. Yes. Thank you. Very
Yep.
helpful. Thank you
Yeah.
for everything.
You're welcome, Navi.
You don't want to give up too much money, right, to close it
Yep.
out.
But you know,
Yeah.
this is Apple, and you have until January. I normally, when I do covered calls, I don't
That's
normally exit out
well.
my position. I just, because your theta is your friend when it comes to covered
Yep.
calls, right?
When you
But
sell the call,
Yeah.
you sell an option. Yep. And
yeah.
the other thing too is cover calls. Really, when did you open it?
Just yesterday on
That's
Friday.
not bad. Okay, so
Oh,
that's
still
not too bad.
new.
Yeah,
Still,
you don't want to normally cover calls. You want to keep them as short as possible.
yeah.
Oh,
No,
okay.
30, yeah, 30, 60 days is probably the farthest you want to go because that's a lot of room, especially for Apple to move.
Yeah. I mean, if you want a passive income, you would like to keep it in 2 weeks, right?
Copy.
Well, you know, but sometimes you don't have a choice when the price is going up and you don't want to your share got hauled away, so you just
Right. That's why I
roll
protect
it,
my
you extend it out. So
Yeah, but
so each situation is different.
Yep.
What you want to do is you want to look at the current going price for Apple for whatever stock you are, and you look at your paying price. If you are giving back more than you pay for, then there's no reason to close them out.
Yeah.
And the funny thing with covered calls too, right, is you're like, hey, I'm up 70% of my covered call. What does that mean? That means the stock's what? Going down.
Yes.
Right? So that's the other side of the sword, right? With covered calls. You're up, but that means the stock has to be going down.
Mm-hmm.
But then again, your chances are the higher that percentage goes up, that you're going to get out with collecting the premium and keep your shares, and then you move on and open another one, and on and on.
Yeah. All right, guys. I think we're gonna cut this short now, Tom. Mike is going to be live at 9 o'clock. If you guys want technicals, Mike normally go over technicals, so go ahead and go to Mike today. Spy Lord, his name is Spy Lord, so or Money Mike. So please follow his YouTube, and he is there waiting for you guys. So we are going to close this, and I would like to say thank you, Tom. First of all, thank you, Josh, for being part of our guest today, but he's not here anymore. But thank you, Tom and Airtwan, for being here. I know Tamir was in the house, and next time perhaps Tamir could join us and give us some fundamentals like Airtwan. By the way, we're actually doing a small coaching with Tamir, 20 people. Is the maximum for that. So if you guys would like to do coaching with me and Tamir, Tamir is actually advertising that to his channel. Okay. But for now, we'll see you guys. I have a pre-morning huddle on Tuesday. Tom and Airtwan's gonna be there, so we'll see you. We'll trade shares if QBTX allows us and nice to us, and Tom and I will go ahead and buy QBTX with the big whale. Airtwan's behind us, so hopefully we could be able to push that QBTX soon, or RKLX or something, right? OKLL. So let's see how it goes with that.
Every time Airtwan buys, it moves.
Yeah, so we're gonna need a lucky charm, but Airtwan is going for a long vacation, so I'm not quite sure if Airtwan's gonna be in the Discord for that time. He needs a break. I told him to take me with him, but unfortunately I cannot. So maybe one day, right, Airtwan? So good night, guys. I love you all. Airtwan, would you like to say some words before we go?
Night.
Tom, any words? Oh yes, once again, Tom is selling his merch. He has a hat as a turtle trading.
It's not live yet. I just started this thing yesterday. You're jumping the gun.
Hey, it's always good advertising. So remember, he's our turtle trader. He's our one of the best junior moderator, and of course, don't forget Eddie and Ike. Right, those are our favorite. So all right, guys.
Mr. Tom. I sent you a direct message. I asked you about coaching, one-to-one coaching.
On Discord, I'll get to it. Yep.
Thank you.
All right.
You bet.
All right. Thank you, guys. By the way,
Thank you so much, Miss Mary.
You
Good
are
night.
Thank you, Miss
welcome.
Mary.
You
Thank
are
you, Thomas.
Good
night,
Yeah,
guys.
thank you guys. Have a
Thank
good
you,
night.
everybody. Have a good day.
Thank you, Big D. Thank you, Priscilla.
No problem.
I'll go ahead and exit out.